So, can the Federal Reserve raise interest rates by 1 percentage point? What's going on, team? It's Ricky with Tactical Solutions. This is a question that a lot of beginner traders have been asking me. And this is a question that a lot of people have after the report that was released in July, and it was the June CPI data report. So, inflation was at a 40-year high at 8.6%. We had expectation at 8.8% for the month of June, and it came in at 9.1%. Now, the reason that there is such a concern is that the Federal Reserve already raised interest rates by 0.75%, to 0.75. This was one of the largest interest rate hikes that we've been able to see since 1994, if I'm not mistaken. With that being said, being able to see that the June inflation surpassed the previous month inflation from 8.6 to now 9.1. Again, the concern is, does the Federal Reserve have to take a more aggressive approach in raising interest rates? So I want you to understand the context of the concern. So I began to do a little bit more of due diligence when it came down to this. And one of these articles that I found, I think put things into perspective pretty nicely, where they first talk about, well, right away, as we received that June or the CPI data report that was released in July. Obviously, the concern right away is, oh my God, inflation has not peaked. The Federal Reserve is going to have to take a more aggressive approach. They already raised interest rates 0.75%. It makes sense on why people naturally react and think that, okay, well, now from 0.75%, we're going to have to raise interest rates a full percentage point. And although that's what you might initially think, one of the main reasons that doesn't make too much sense is already from mid-June going into July, we've already seen oil prices drop. And oil and food are the two areas that are not included in core inflation, because regardless of how aggressive the Federal Reserve tries to increase interest rates, it does not affect the prices of oil and food. Right? So that's why with core inflation, which is what they could influence, is not included with food and energy. And if you've noticed, every CPI data report that that has been released, we've broken it down on this channel, and a majority of it is really made up in that energy sector. And if we're seeing prices already dropping from June to July, and the Federal Reserve obviously is aware of this, then first off, they know that what they do by raising interest rates does not affect those specific areas. Second, they also understand that prices are already beginning to drop. So that's why right away when that CPI data report came out and everyone's reaction was, get ready for a full basis points, to me, it just wouldn't make sense. First off, it doesn't influence that specific area, and second, they already know that oil prices are already dropping. And this kind of put it into a perspective of, the probability. And I thought some of you guys might appreciate this, where it was a really great study in mob psychology, where we went into a week of a 92% chance that it was going to be a 75 basis point hike. So that's what we actually did last month, right? A 0.75%. And we exited Wednesday with an 82% chance that it was going to be a 100 basis points. So again, 1%, said Art Hogan. The thing that I liked that they did was they came to revisit this. By Friday, right? So Friday, obviously, we saw that the market began to rally. We had an amazing trading day, especially if you joined our live trading session. But by Friday, strategy said that there was going to be about a 20% chance for a 100 basis point hike priced into the market. So again, it's just understanding that when all you do is just react right away based off of what is presented to you, such as that CPI data report, I 100% understand why people's initial reaction was to think that, yes, we're going to have to take a more aggressive approach with raising interest rates. But when you first then realize that, first off, by raising interest rates, we don't even affect the prices of oil, and that was the biggest contributor for the month of June. And second, we're already seeing oil prices drop. And if they understand that, then them raising interest rates would therefore be counterproductive. In my opinion, I actually think the Federal Reserve has a better chance this upcoming month. And again, for those that are going to be asking, this is going to be on July 26th and July 27th, around those dates, that they're going to be releasing that interest rate hike. And I will be live streaming that on our YouTube channel, so make sure that you subscribe. But I wouldn't be surprised if they actually go back to half a basis points, which is 0.5%, because of them seeing that oil prices are already beginning to drop. Core inflation has dropped consecutively 3 months in a row. So again, core inflation is everything not including food and energy. I know that this could be somewhat confusing, but when you begin to understand what the Federal Reserve and the tools that they have and what that influences, if they're already seeing oil prices drop, they know that they don't affect that, and they've seen core inflation consecutively drop 3 months in a row, and again, it doesn't mean that they have to take a more aggressive approach, because things are beginning to cool off. So I'm very excited to see what the Federal Reserve actually begins to present, and I hope that this is something that you're looking forward to and being able to watch on our YouTube channel. So I wanted to wish you guys a happy Sunday. We will be hosting our Sunday Stock Talk today. So it's when I go live and I break down your top stock, and I do it live on my YouTube channel. So again, please make sure that you subscribe. Make sure you turn on those post notifications so YouTube alerts you when it is that I go live, so I can break down your top stock. If you have any question that you would like me to answer for you, again, I answer all of my direct messages, but you need to reach out, right? We have a free trading group chat. It's via Discord, so it's absolutely for free. And that's that second link down below if you have any questions about the overall stock market and simply just getting started. We did do an extension for our weekend sale. It's $100 off Learn Plan Profit 2.0, and that's going to be that first link in the description. One of the last things that I do want to remind you is our TechBuds Staycation giveaway. So this staycation, again, is going to end on August 7th, and it's super simple to enter. You can click the fourth link down below or head on over right now to shop.techbuds.com, and for every $1 you spend, it equals 5 automatic entries. So I'm going to be flying out 3 lucky winners, all expenses paid. You're going to be staying at one of our Airbnbs in Chandler, Arizona, and you're going to be hanging out with me and the team at the TechBuds HQ. So very excited to see who ends up winning. Again, you got to pay to play, and that's going to be that fourth link down below. Please understand that, I mean, if you've ever wanted a mouse pad, then this is an incentive for you to buy it. Please do not buy anything that you don't actually want. That's not the point of these giveaways. It's just for there to be an incentive or added value to what you already were thinking of doing, right? So we have all the aluminum art, we have all the flags, we have all the accessories, all the apparel. So anything that you've ever wanted, just know that you automatically get entered towards our staycation giveaway. And again, that's the fourth link in the description of this video. Appreciate you guys' time. Hope you guys had an amazing weekend. I'll see you guys for the Sunday Stock.